And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily market show where we go through all the charts, the news, the information, anything really grabbing our attention, quite frankly, and kind of give you guys some insight into what we're seeing here as coaches at Tackle Trading so that you can be more prepared to go through your trading day. Welcome out, everybody. We've got an exciting show here in some ways. There's some pretty interesting conversations, pretty boring show in other ways because the market's not really doing much, but that is the market that we're in right now. Kind of a slow grind up this week. Still very, very impressive when you just look at 4 candles in a row. We're going to break down all the action. We're going to look at all the charts with the coaches here. Facebook is running. Cody wanted me to make sure I started with that, by the way. He's very, very proud of that chart. I want to do some crowing about his trade on that Facebook trade. We'll take a look at that chart at some point.
I was waiting for that.
So Cody wants to start the show by scoreboarding.
He did.
Yes, I did.
Is that our new thing? Do we just scoreboard at the start of the show?
Yeah.
Is that what we're gonna do, Cody? We're just gonna scoreboard all day long.
Hey, he's so happy.
If we're not done, scoreboarding with Cody here, he also wanted to scoreboard on the British pound CAD pair, which was a beautiful technical setup. So well done. I don't know about the scoreboarding to start the show there, but well done.
All this is patience. You can see these charts and just wait. And then once
hey Tim, since we're doing it, why don't you just talk about Pinterest some more, right? Let's just
Hey, listen, man, Pinterest is cool. There's no doubt about it.
That's the level of analysis that we've come to enjoy. Tim, yeah, Pinterest is really cool.
On more important news, though, weekly jobless claims, stimulus conversations, China. There's a lot more we got to get into here. Maddie, Mark, Cody, and myself here. Tim, as always. Matt, how you doing, sir?
No, Tim, doing really good. Excited to be here with the crew to break down the market action. And it's an amazing market this week so far. It's been just boring after boring, but that market just keeps chugging away.
Well, yeah, and if you think, the performance is strong. Even though it is light action in terms of that, Matt, we've got 4 green candles in a row, and we are chugging forward a little bit here, a little bit there, a little kind of paper cutting its way up the chart.
Yeah, I was thinking about that today, Tim. I was like, man, it's been a really boring light news week, right? And I'm like, yeah, but the market's still up, 130 points off the lows from Apple's report. So price action isn't boring, but the news has been fairly boring this week. Yeah. And you know what? Good. Stay bored for a little bit. Just stay bored. We don't like the craziness.
I agree with that, but there is some speculation that it might get a little bit crazy here coming down the pipeline. I do want to start with a couple of broad conversations. Number one, the jobs number, and then the implication of tomorrow's jobs report. Weekly unemployment claims, Matt, that came in below expectations, still over 1 million people, 1.186 million to be exact, actually filed for unemployment over the week, though. Continuing claims are still very, very high, and we've got that big monthly unemployment report tomorrow. Could the fireworks get started tomorrow morning here, Maddie?
Well, if last month's unemployment report was anything to represent the future of the unemployment report, I'm sure we'll figure out a way to not categorize all the labor numbers in the actual labor report that comes out tomorrow. So, with what happened last month with the labor numbers and the month before that, quite frankly, the unemployment rate, this report used to be a very important report, like one of the top 3 economic reports we'd get on a monthly basis. You would put the unemployment numbers up there with manufacturing PMI numbers. You put them up there with the CPI numbers. You put them up there, obviously not to the level of importance of, say, initial GDP numbers or the obviously Fed actions. But, it's just quickly becoming less and less important to me. And a lot of that's due to the level of manipulation or confusion that report represents. I don't know about you guys, but I don't trust the unemployment numbers at all. I trust the initial claims. Like the initial claims numbers today, even though it was 1.186 million, you got to look at that as a little bit positive, given the fact that it did contract quite a bit against the last few weeks, so that we're averaging about 1.4 million. So I think initial claims in this environment has been a much more accurate reading of the actual labor strength or weakness versus what the actual unemployment and labor numbers are.
Yeah. Marky, what do you expect? I know that I think you and Matt were talking about this last month when we had that conversation about those numbers that came out seem very, very faulty. Do you expect tomorrow to be a beat? I know Trump was hinting that the great job numbers and all that kind of stuff. I
Listen,
think
I don't
that
know if
led you
it,
to believe that.
I don't know if it's going to be or not. I would definitely put, like, if I got even money at Vegas and said, is it going to beat or not? Oh, I'd definitely place a standard deviation bet on that. Plain simple fact is, whether it's retail sales or the monthly unemployment report or GDP, every major report in the pandemic, without exception, has resulted in bullish price action on the release of the report that day. It's 100% batting average. So we are, like, whether you are a gambler at sports casinos or you are a stock market trader, trends are powerful things, right?
Mm-hmm.
Now, that doesn't mean you go bet the house and blindly do that, but I am anticipating bullish action tomorrow because every major report has resulted in bullish price action in the pandemic.
It's got to add a little bit of risk here, though, guys. I mean, it feels a little different creeping into this report. We've had light volatility, doji here today. I mean, don't you hesitate just a little bit here pre-Friday?
I not with the labor numbers tomorrow, given the backdrop of what is happening from a political perspective.
Mm-hmm.
If you didn't have those important negotiations between the Dems and the Republicans on the Hill the next 2 days, they put a deadline on Friday earlier this week, and you're hearing a lot of chatter from the Republicans saying, well, if we don't get a deal done by Friday, it doesn't matter the time you put on it, we're probably not going to close the gap. And if they don't get a deal done on Friday, most likely the Republicans are going to rely on President Trump to do at least something through executive orders. So, with that backdrop, the only thing I think the labor numbers can really do tomorrow, in my opinion, going into it, is influence those negotiations. If a number is a really big beat or if the number is a really big miss, it could influence the negotiations to a certain extent. But outside of that, no. This report remembered what the labor numbers are, guys. The labor numbers are not a empirical mathematical report. It's a surveyed report, right? And so what you're seeing in the labor numbers is twofold right now. The first thing you're seeing is a very difficult job of trying to understand how you categorize this labor report. You have a lot of contractors that got laid off. You have a lot of employees that got furloughed that really never came back to the labor market, that they were counting them as employed individuals because they were just furloughed with the expectation for that to come back. So I think these surveyed type reports in this environment from a pandemic perspective makes it very, very difficult to get a true understanding of the strength or the weakness in the labor numbers. And that's why I think initial claims, which is much more mathematical based, is a more accurate reading of the strength or the weakness in the labor numbers than the actual unemployment report is. And so for me, the unemployment report, obviously it's a headline number. There's no doubt about that. Whether it's a beat, whether it's a miss, it's going to be one of the number of things that everybody's looking at from a traditional financial media perspective tomorrow. It certainly has the ability to create volatility. And if it wasn't for the backdrop of the political discussions, I would probably have a little bit more importance on that number. But I don't think I'm any different than a lot of hedge fund managers out there right now that are saying, yeah, the labor numbers are important, but they're less important at this point than they have been in previous cycles.
Mm-hmm. Yeah, and obviously we'll break down those numbers tomorrow as they come in and see what the market reaction is. I think obviously
over
Friday
under. Expectation of 10.5 over under.
Under. Yeah.
Listen, I trust that the individuals taking the survey are doing their due diligence to serve their overlord masters and produce the numbers that have been requested and required by them.
I'll take the over just to play a little contrarian, but I think the edge is to a beat here.
Mm-hmm. Mm-hmm. It doesn't really change the nature of the labor conversation, though.
No, it's not just the number that this represents. You got participation rate. You got, the average hourly earnings. You have average hourly work week in this report. So the devil's going to be in the details here.
Back on the markets here for a bit, Matt, if we can. I do think the more important conversations are around China and stimulus here today. The S&P obviously a little doji here. Had a pretty good week, 4 days in a row, but there's ongoing conversations around that stimulus stuff. Matt, there was a couple real big headlines for me from that today. One involving potentially executive orders. Update us what you know here, Matt, on stimulus.
Oh, say that again. I was responding to chat real quick, T.
No, I'll throw it to Mark. Marky, give us the updates on the stimulus stuff right now.
Okay, so the difference in stimulus right now is Democrats are holding firm. The Republicans keep upping their ante, offering $400 a week in unemployment, up from their $200 a week. Democrats aren't backing down from $600, offering $200 billion in state and local aid, where they had zero before, but that's still far less than the $1 trillion Democrats are seeking. And the rumors are that Republicans are preparing to walk away and rely on any executive actions Trump can do if a agreement isn't reached by the end of the week. Now, remember, we have their August recess scheduled. There's under normal conditions tomorrow, which is the artificially imposed deadline, would be also coincide with the August recess. So everyone can go home, do their campaigning, all of that good stuff. So still haven't reached a deal. Progress has been made. Republicans are up in the ante. Democrats are holding firm. Typical political theater, right? This is typical political theater. The only question is, do Democrats hold firm? Because I think the Republicans, at least for a few days, have sweetened the pot as much as they're willing to. So do Democrats meet them halfway? Do they meet them 75% way? Are they serious about Trump doing executive actions, which as a political science junkie raises all kinds of questions about constitutionality. That little thing we call the Constitution.
It doesn't raise constitutionality questions. The Constitution is very clear on who controls the purse.
But so here we are in the theater still. The only question I have, as far, because we're still on the expected deal to get done, is, are Democrats truly committed to drawing the line and not coming down from their initial stances? That's the only question right now.
Well, there is some intrigue into that addition of executive orders, though, Matt. Whatever the constitutionality of it is, one way or the other, it does pose this threat that maybe the Republicans can say, hey, listen, we tried to come to the table. We tried to come and meet you guys on some of these issues. You wouldn't do it. Yeah.
It's an optics argument.
Yeah.
Whenever I try to look at this from a negotiation perspective, I try to be as unbiased as I can. I try to, honestly, I try to approach it with the vein of thought that if I was hired by the Republicans to, figure out a strategy that is best fit for the political environment, what would I recommend? Or if I was hired by the Democrats to form a strategy, what would I recommend? So I try to approach those types of things, seeing both sides of the ledger. Try to approach it like an analytical lawyer to a certain extent. Leave my personal opinion and desires at the door, right? And like I said a week ago, if I was advising the Democrats, I would tell them to remain firm, and I would continue to tell them to remain firm, because when you're looking at the political, environment, the political strength is not strength. It's where's the weakness in the other party. And the weakness in the other party right now, when versus Democrats versus Republicans, is those 6 senators that are up for re-election in Republican strongholds. That, as it polls right now, they're either getting beat right now or in some type of very, very tight race. So it's an optics really conversation is what you're really having. I hope the Democrats do personally come down and gets a deal done. I think there's a deal to be had here. But from a political strength versus weakness, those 6 Republican senators that are up for challenges right now, that's very, very concerning for McConnell. So I mean, guys, there's a reason McConnell has basically said, I want a deal, whatever that deal looks like. I'm willing to do a deal, whatever, he's basically told the negotiators, whatever deal you guys find, I will support it. So it's going to be fascinating political theater. But at the end of the day, the threat of Trump executive actions is an optics, type of political conversation, in the sense that I don't believe Trump can do very much through executive orders when it comes to controlling the purse. That will be constitutionally challenged, and it should be constitutionally challenged, because we do not want the executive, authority controlling the purse that is very clear in the Constitution rest in the House of Representatives and in the Senate. So,
listen, the Constitution is extremely important. And if for whatever reason they don't get a deal done, because Matt's right, this is crystal clear. Those basic separations of powers is one of the things that makes America beautiful. It's one of the things that have kept this republic as it's gone, with very little true political turmoil over 200.
Mm-hmm.
And what are we going on? Almost approaching 250 years here in a couple years, right? I don't care if you're Republican, Democrat, man. You cannot.
I don't want it to happen, but let me speculate for a second here. I mean, what if unemployment?
Go ahead.
What if he says there's a national emergency on unemployment? We have to come in and do something on that one topic.
Okay, the next time, and whatever the short term, and once again, I'm very conservative in my political views. And what scares me from a conservative point of view is a Republican doing that, setting precedent. What's the next time a Democrat's in the White House? What's the next emergency? Oh, we got global warming.
The next emergency is global warming and $13 trillion price tag, according to that. So,
you don't break. Don't set precedent.
I'm telling you, you don't want Trump doing this, because you don't want that to be said as a president. But I also don't believe this is actually a real threat. It's an optics conversation, in my opinion. And that's where I think the strength of the threat really lies, is saying, okay, Dems, if you're not willing to come down at all, we're going to have Trump, in the face of 3 months before a national election, and we're going to go out on Twitter, we're going to go out on Facebook, we're going to go out on CNBC, we're going to go out and we're going to eviscerate you guys for not meeting us in the middle. We're going to eviscerate you, and we're going to say Trump had to come in and do executive orders. That's a real threat that will play in America. And so I think it's a really good threat from a political leaning perspective. I hope a deal gets done and we don't have to be doing this next week.
Mm-hmm. Well, let me ask you guys point blank then. Do you think we will get a deal by next week?
Friday. It's by the next Friday. No, it's this Friday. It's tomorrow.
Well, it wasn't the deadline to set it in motion for the legislation to go to the floor. Right.
If they don't get a deal done by Friday, you could see the Republicans walk.
So the good question is, do they get a deal done in principle so that they can vote on it next week?
Mm-hmm. You think so, Mark?
If our representatives truly did represent the American people, yes, a deal is there to be had by both the Republicans and the Democrats. The Republicans are coming up. The Democrats need to negotiate and come down a little bit. Those are standard negotiating tactics. But that's a big if, and that's a very idealistic viewpoint of politics in America. So I hope a deal gets done. I still believe a deal will get done. Deadlines do amazing thing in negotiations, guys. They do an amazing thing in negotiations. Where somebody talks tough, you're faced with a deadline and you actually see the problems that not getting a deal will get done. You have a tendency to compromise a little bit. Mm-hmm. And so I do believe the numbers are there to get a deal done. I hope a deal gets done so that we can move on and talk about how fake this market is.
Well, there's some more, banter and speculation, and also chest pumping that we got to talk about first. That is China here. Obviously, stimulus is going to be an important part of the conversation moving forward. I would love it to have this one done, but would we all be surprised if they're negotiating whatever round it is in October for another one, or what? I don't know, but I hope not. We've got to stop this at some point. Get a deal done. Find a middle ground. That's my perspective. Let's move on. Let's talk China though here for a minute, Matt. There's actually quite a bit of headlines coming out of Pompeo and China over the weekend, or overnight, I should say, and this morning. Mark, give us an update on China here. Obviously, this is something you track quite closely. What do we know so far?
I mean, they're going after the tech. They want Apple to take Chinese apps that they deem threatening down. They want to they're going after, they're needling, and they've been needling China for months now, right? There's never been one gigantic, oh my gosh, what's going on? But it's this constant needling through rhetoric or Senate passage of resolutions that target individuals, or comments on the trade negotiations, or the stuff with Yahweh, now TikTok. It has been this consistent needling. It's almost as if they're like, all right, we're going to push it a little further, see if we can go China to do something. Now we're going to push it a little. They're seeing how far they can take it each and every time. TikTok and Chinese apps is the current round of this needling going on right now.
Well, there was a little bit more to it, I believe, I agree. Those things were in there, but wasn't Pompeo calling this some new clean network? And they're even going into like storage companies as well.
Update, Tim.
Yeah.
Pompeo last night, and let's take a look at the futures market very quickly here. Pompeo last night, let me break this down on a 30-minute chart here. Pompeo last night talked about, Tim, unveiling what's called the 5G clean path, okay? And in the 5G clean path, it's basically China, right? But basically, Pompeo, he lays out a plan, and these are just some of the bigger bullet points in the plan. Number one, he wants untrusted Chinese apps to be removed from Google and Apple stores. Number two, he wants limited availability of apps being made by Huawei to be able to be utilized in the United States. And he urged firms to stop using Chinese cloud providers like Alibaba, Baidu, and Tencent. And so basically, this is the plan to really limit Chinese from, getting access to personal data from U.S.-based companies. Obviously, in those Chinese trade talks, one of the biggest sticking points in those Chinese trade talks was how the Chinese still U.S.-based intellectual property. And so this targets a little bit of that, which I support. And it also, targets protecting American consumers' personal data so that the Chinese government doesn't get it and do something bad with it. And I have absolutely no problem with America limiting the ability of the Chinese government or Chinese companies from getting access to U.S. companies' IP. I have no problem with the U.S. government limiting American consumers and trying to protect American consumers from getting their personal private data taken from the Chinese government or Chinese corporations. And guys, if you go to China, you realize China has been doing this same thing to companies like Google and Facebook and Microsoft for years and years and years. So It's nothing unusual. And nobody in America should have any problem with limiting the Chinese government's ability to take our data. Nobody should have a problem with that.
Mm-hmm. Does this increased, conversation that's happening every day make it so that you don't want to play these Chinese tech companies though, Matt? Because I get it. I understand the perspective Pompeo's coming from, and many of these issues I'm not going to disagree with, limiting the transfer of data, making sure things are secure, locking down systems. I don't think you can really argue with that part of it. But do you just kind of avoid Chinese companies? Because I actually kind of like the potential for a breakout here. There's many of them still on my radar.
Yeah. Well, looking at FXI and then taking a quick peek at, the companies that Pompeo talked about, Baidu setting in a little bit of a head and shoulders formation. You got VIPs here, breaking out, and a stock that's been on our stock report.
This just shows your bias towards VIPs. The fact that you would ever bring up VIPs before Baba.
I like this little. I just the little engine that doesn't stop. I just like this. And how do you not like that company? And I'm just talking about technical analysis here. How do you not like that company more than, say, BAVA. They're both very, very good. But Tencent, not Tencent, but maybe it's because I call it the VIPs and I have a emotional response to it at this point.
Uh-huh.
Completely illogical, irrational, just emotional, right? But I do like the VIPs. It's subconscious, Tim. I wasn't actually meaning to bring up VIPs. I had no motive there. It truly was subconscious. But you are right for calling me out on the VIPs before bringing up BABA there. But you look at BABA's potential breakout here, and that's a really good chart on a breakout potential. You have a little bit of neutrality, a little bit of a cup and handle coming into it, some consolidation in the last couple of days, waiting for the breakout. That's a really, really decent technical setup on a really good company like BABA. And so I wouldn't fault anybody for taking the trade on the breakout. I wouldn't fault anybody for taking the trade on VIPs. For me personally, in the back of my head, I just feel like there's going to be that day where China says something or Pompeo says something, and you just get some random volatility where you get stopped out.
Mhm.
And so in a world where the stock market is just rip roaring and, euphoria is taking hold and the central bank has done what they did, and you got the Fed put in place, and you got the US government, saying we're going to go bail out more airlines and we're going to put out another stimulus. And there's just so many areas of the market. And yes, there's a lot of areas of the market right now that could be prone to random volatility. But if you can take out the geopolitical situation, I think you have a cleaner track here on some American companies. So I see the VIPs, I see the BABA break. I would not fault anybody for taking them because they're clean charts on good companies. But for me, I just the geopolitical. And I'm not talking geopolitical risk of massive downside. I'm not talking geopolitical risk. I'm talking that one day where you get random spikes to the downside, stops get nailed, and it creates a situation that adds one variable to the equation that I think you don't need.
Well, all right. So then maybe there's a solution to that. Maybe you position trade it, you don't swing trade it. Maybe you build the trade in a way to where you compensate for that kind of volatility and that kind of risk.
I would still rather position in the U.S. markets with the Fed doing what they're doing than the Chinese markets.
Marky, are you avoiding Chinese tech? I'm sure I haven't heard you bring one up for a long time. I'm sure you're not trading them. Is this risk just there that you just?
I mean, what are you going to do? Have a million trades out? Why are you doing something where there's additional risk? And I've been that way, for a long time. Like I sometimes play FXI, the broad index, when it takes a dip. But other than that, there's just a lot you can trade. There's a lot you can trade.
Yeah, and plenty of other companies, obviously, that are grabbing our attention just from a volatility and an earnings perspective. As we get through earnings season, there's a bunch of U.S. companies out there that are setting up as well. I understand. I still like that BABA breakout. I'll be very blunt. I do like that potential from a long-term perspective. And the weekly and monthly charts, that breakout it had back there about a month and a half ago. I mean, guys, that was a multi-year level that we broke above. This could be setting up for trending, in my opinion. Yeah.
No, and I don't disagree. I mean, the technicals are strong. Bob is a good company. You had the breakout. Now you have consolidation on the weekly chart. The weekly breakout of 268 certainly could be tradable, both from a swing trade and a position trade perspective. Tim, I do not disagree with your analysis. I kind of lean to where Mark's at, where if you can remove one of those random political variables in a world that's absolutely crazy train out there, I think you make that choice. There's a lot of companies to trade that doesn't have the geopolitical risk that some of these Chinese tech firms have.
I mean, you're going to play something with Chinese risk, play AMD, it's there's just a lot of things. I mean, there's certain stocks that have Chinese risk. AMD is one of them, including the Chinese companies. That since that breakout.
At what point does AMD get to $100?
It's getting there, right? So
it doesn't want to stop.
By the end of the month.
What is?
That's tough because set up for a pullback. By the way, so
what kind of odds are you giving me by the end of the month?
The thing is, I mean, you could pull back, pivot, and still run to 100. So I don't know what is the delta on the 100 strike.
19. Can I get 5-to-1 odds?
No, 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 I will not take the markets out there. I do not believe the market math is always efficient. So no, I don't trust the delta there.
Do you think
Give
my
me 4
naked?
to 1 odds, I'll take it.
So you're saying my naked put expiring at $64 in 2 weeks is probably good?
I think you're fine. And if it doesn't, if it's not good, I think you're okay owning AMD. That breakout was so legit. You know, we saw that weekly chart, Matt, that you could literally take a picture of that chart and put it in a book. There's no doubt about it from that long-term perspective. That weekly chart was very, very strong. So yeah. Let's keep moving through the markets here, guys. One more broad area I want to talk about before we go into commodities is the airlines, Matt. We were talking about stimulus and money and all this kind of stuff. Give me Jets or Delta or any of these companies. There was a rumor or discussion that they're going to throw another $25 billion at these companies. And basically, President Trump was saying, we can't lose our airlines. You know, our transportation industry is too important. This is the ongoing assumption about some of these industries, some of these companies, that they will just get government support, government aid, and government backing. Now, if the airlines do get the money, they've got to extend their job protection, which is coming up. I believe they were able to start laying people off here pretty soon. That would be extended all the way out to March. Maddie, do you have any interest in the airlines here at all? In general, what do you make of the news? The next 25 billion being thrown into the pot here.
I'm so disgusted by this. I mean, I'm just so disgusted by this. We can't lose a private company. We can't use a public-private company. We can't let a company fail. We can't let a new company evolve, create better efficiencies, a better company, a more profitable company that's ran by better people, because we keep bailing out these companies because of that argument. Oh, we can't lose our transportation. And this isn't a play. All politicians do that, right? They all do it. But I just, it's disgusting to me. Just absolutely disgusting that constantly we just bail out corporation after corporation after corporation on the backs of them, you know, borrowing money over the last 10 years to buy back their own stock. It's just disgusting behavior.
And that's the big thing, right? Had these companies acted responsible and say for a rainy day,
I would have a different opinion, Mark.
But when these companies spent so much money buying back stock, guess what? Sell some more. You know, there's your funding.
Their greed of just constantly just pushing price up. And now when something bad happens, we have to come in and bail them out constantly. It's disgusting. It's anti-capitalism. It should not happen in America. So I have zero interest in making money off these companies. Zero interest.
Mark,
if the best you can say is there's a bottom because the government's going to bail them out, that doesn't represent a good investment thesis for me for growth.
No, it does not. No, it does not. I would agree with that 100%. If government backstopping the money of 25 billion across all the airlines is the only thing you can hang your hat on, if you don't believe transportation is going to kick up or businesses are going to get back out there pretty quickly.
This is 3 months after the last bailout. You think this is going to be the last $25 billion handout the airlines get?
No, I don't. I don't think either side of the aisle is going to fight it, by the way.
Take their salary and their bonuses. They're going to lay off people. Think they're going to strip away their stock options? No, this is ridiculous behavior. Let them fail.
Yeah.
Get it trending. Let them fail.
Let them fail. I mean, if they did that back in 2008, we'd have a different situation here, man.
And what I hear from people is like, well, if these companies go under, it loses a lot of jobs. No, it doesn't. They're going to lose those jobs anyways. What happens is the only people impacted are the shareholders because they declare bank. I mean, it's like Hertz. It's like Tailored Brands. It's like all the oil and gas. They restructure. They give their executives a big bonus to retain the talent. And then they keep on going with operations.
Let's retain the talent of a failed company. Get out of here with that nonsense. No, let them fail. They would get gobbled up by some other company that's more efficient.
Mm-hmm. Yep.
Let the free market be the free market.
Mm-hmm. Let's keep working through the markets here, by the way. Going to crude oil next. Let's go through commodities if we can here. Crude oil just bumping up against that 200 period moving average. Really stuck in that middle of those moving averages and that range here. I have no interest in trading this one way or the other or cash flowing on it, by the way. I've kind of avoided it altogether. Mark, I know you continue to cash flow on it because you like the neutrality and you believe the demand and supply relationship is going to keep it consistent. Any update on crude oil here, Marky, from a fundamental perspective? Anything in the news on crude?
This is the most boring crude oil chart in the history of crude oil charts.
Yep.
Good cash flow stock. It's just not a directional instrument right now.
Yeah, I'll tell you a chart that's not boring, though, is gold, silver, and they are all over the news here lately, guys. Obviously, I read some of the dumbest headlines as to why they're going up, but it's infuriating when you're scanning financial media in the morning on those daily bases. Gold running, I don't see any reason to change our analysis on that. I do have a question on silver when we get to it, though, Matt. Any update on gold, silver here for you, Matty?
Nope, don't care what anybody says in traditional media. This is a Fed-based inflationary concern trend that you are seeing develop here on gold. And as I've said for the last, 6 months, this is just starting.
Mm-hmm.
Just starting.
No, I agree.
Hey, Jimmy Schill, get out there and find another reason why gold is going up. Come on, you're not doing your part to try to send gold down.
Yeah,
don't get me started on Kramer. I'm done with Kramer.
I'm sick of the flip-flopping.
He's a daily flip-flopper, Matt. It's not even like over months. It's not like last month he said something. He literally flip-flops yesterday till today.
The don't question the Fed and the Fed's role. And if you question the Fed, I'm going to block you. Come on, get out of here. I'm done.
Yeah. Give me silver, though. I want to ask you guys a question. And I think probably a lot of people out there in tackle trading and team tackle probably are having some similar feelings I do. Obviously in long silver, like so many people out there are. At some point, do you think about taking some off, locking it in? It's had an incredible run. I've been very patient. This can be a tricky one psychologically, Matt, for traders, dealing with profits, letting your winners run, all that kind of stuff. How do you approach it when you're sitting on a profit? You believe in the fundamental premise, but you're like, okay, maybe I need to knock some of this off. What would you say to a trader that's dealing with that question?
It's, I totally understand it. You handle it through stop loss management, but it's like I said 2 weeks ago, 3 weeks ago, Jim. I said 90 to 95% of the people that, trade these silver booms or gold booms, they are premature in locking in their profit. They miss out on those larger runs. They're premature in that. And like I said, earlier this week when you asked me, well, when silver hits 30, I'll update my target to 32, then 35, then 38, then 42, then 48. So,
you would make a good Goldman Sachs analysis. Hey, the price went up. Let's up our target,
Well, unfortunately, I've been saying that for silver for quite some time. But they will up their price target when it exceeds the previous price target. That there is a difference there. But no, I like the momentum here in the chart. You got the fundamental and the economic condition that is supporting it. And this goes beyond this, because what happens when the economies really start humming out there and you see more ESG movements out there? Silver benefits that environment. So I like silver. I love gold. I like silver. It's kind of like you date silver and you marry gold, but I like them both, and price is going to continue to go up, Tim, in my opinion. It's going to be volatile, both on the upside and the downside. But I believe gold has hit its all-time high. It has surpassed its all-time high. Silver's all-time high is 48, guys, and I believe that will get hit at some point.
Yeah, it is a situation. Obviously, it's a good situation to be in when you're dealing with the emotions of profits here, Marky. I know that for you, for a lot of the way you approach trading, you're pretty conservative. You end up taking profits a little bit quick. How do you fight that emotion, though? How do you let winners run and all that kind of stuff?
It's like when you and I are talking in private, Tim, I'm like, I really do believe that because I spend more time as one of the best bottom fisher technical pattern thought through theories as possible. So come to me when you're bottom fishing at the bottom. Once something breaks out, go to any other coach, because I'm the worst person to ask your guess as good as mine. So not my biggest strength. I tend to take profits way too early consistently in these same situations.
Trend trading 101, let your profits run. I just got to keep reminding myself of that. And you just follow your trading plan, man. I loved what you said. Manage it through stop losses, manage it through your trading execution.
Tim, when you break this down on a 30-minute chart, there is nothing on that chart in the last 3 days that indicates you should get out of this position. Not one thing. Not one intraday support level has been broken. Not one in the last 3 days. So that's momentum, guys. That's what you're seeing coming into silver. And if you were looking to adjust that from a management perspective, there's quite a bit of support levels that you could choose as silver approaches that target of $30. If you wanted to be aggressive on the stop loss management, you have an old resistance zone on the intraday right there at 28. As the market opened up, you had a little profit taking on the cash open. Where to come down into 28. You also, if you want to be a little bit more conservative with your stop loss placement, you have a nice little old resistance zone right around 27.20 with support on that high base on the intraday at 27. You could trail that up underneath 27 if you wanted to be a little bit more cautious there. So you could certainly, look at this trend here and you see the intraday support, intraday support, intraday support, and intraday support. If you wanted to be that individual who's a little concerned about those random shifts in volatility on silver, and because there's going to be days where silver's down 5-6%, guys, in this bull run. There's going to be those days, and those days are going to be represented, in my opinion, as buying opportunity days. But if you're looking at locking in profit, just trust those 30-minute charts, adjust that stop loss accordingly. At $30, you make a decision whether or not you just want to get out and wait for that next technical setup. The high base that formed recently on silver, so you could adjust that through stop loss management. But I'm of the opinion, and I will not come off this. This is a boom for silver. The economic, the fundamental, the geopolitical, the monetary policy, the fiscal policies support price appreciation out of gold and silver here. And to me, I don't think this is ending.
Yeah, it's been incredibly strong. Obviously, one of the best performers across the market here. I mean, that breakout here, just the last little bit, Matt. It's incredible that you were on a 30-minute chart and we saw silver running $5 this week. We're up out of that $20 breakout. We're up like 40% now, just in the last couple of weeks alone. Incredible movement. Obviously, we've been behind that for a while. The dollar sitting on support. I don't see much there to update. And Bitcoin sitting on resistance. Don't see much there that we need to look at. I do want to talk individual companies here next and earnings roundup. There's a lot in there, obviously. But as we make a transition, a couple things. If you're out there watching Team Tackle, appreciate you guys. Love having you come out. Who was at the event last night? Did you guys get a chance to watch that? I know some of you, I saw a lot of names there. That was a lot of fun, Matt. We have that up there as a recording on our YouTube channel. For anybody who didn't watch that, Matt, what did we do last night? Kind of promote that for a second if you can.
Let me answer David's question. David, do you think the metal strength will be until the dollar reserve status is done? David, that's part of my long-term thesis on gold. Absolutely, that does play a role in my bullish thesis on gold, but not necessarily silver. Silver was that. It was that until 1832, but let's not go back historically there. Ever since 1982. Silver has not been that inflationary asset class that you really wanted to look at. Silver is more of an industrial metal that has a tendency to, go with the ESG movement, especially over there with the Asian economies. And obviously technology, the expanse of 5G technology, cell phones, all that plays a role in silver as well. So it's more from the industrial perspective. So that doesn't necessarily play a role in my thesis on silver, but it certainly does on gold. Tim, to answer your question, last night, I thought it was a really cool, laid back, just loose event. We didn't do a whole lot of teaching, but what we wanted to do was, hang out with the crew, bring on the coaches of tackle and have a, discussion on, targeting people who are very, very new to the market. And I thought that, there was wonderful suggestions out of the coaches. I think Mad Dog Greg, I don't know if I want to go Mad Dog Greg because Greg can get passionate real fast. Greg and me, we're brothers from another mother. Like me and Greg have a lot, our passion comes through sometimes. But Mad Dog Greg or Old Money Holmes. Which one, guys? Mad Dog Greg or Old Money Holmes? I don't know which one, but I loved Greg's perspective.
I like Mad Dog. Old Money assumes he was born into wealth, like in a New York City real estate
No,
mogul or something.
We just say it because he loves dividends.
Right, I get it. I like.
We just love it.
Yeah.
Yeah, we just love doing it because he loves dividends. But I loved his perspective because he comes from a traditional financial background, unlike a lot of the rest of us who are just individual traders who have a passion for trading, and helping other people out do the same. But Greg comes from that more traditional financial, portfolio, design from a traditional perspective. And I just love some of his suggestions. Coach Jim had some amazing suggestions. Cody, brought the fire. I just thought that all the coaches stepped up last night, and we had a real fun event.
Yeah. I enjoy it. I enjoy stuff like that, no matter what. And just having, all the coaches from Tackle Trading talking about their experiences. One of my favorite moments in the whole show, though, Matt, was when we were talking about some of our mistakes. We started this show with Cody Crowan, but last night Cody even talked about some of the mistakes he made. We all did. And I think we can learn from mistakes. I mean, that was maybe my favorite moment from the entire panel, by the way.
Well, I just think as new traders, sometimes, and it's not in trading, it's in everything. Sometimes when we're new to something, we make those assumptions that the people that are successful at it, they're just never have had those drawbacks. They've never had those moments in time. And that's just not true. Every one of us individual traders and investors have had moments where we've done some really dumb things, and we've we've made some mistakes. And some of those mistakes and some of those dumb things were just simply because we didn't have the experience, we didn't have the education or market cycle or whatever the case might be. But when it comes to trading, listening and learning from somebody like a Coach Greg or a Coach Noah, or that's been around the market for 15, 20 years now and have lived through the .com, lived through the subprime, lived through the economic changes and the political changes. It's just like, at some point, sometimes like, yeah, it's always new right now. It's always volatile right now. But it's like when you have historical perspective, you kind of deal with it a little bit better. So I really appreciated the openness of the coaches talking about those mistakes. And I hope people, had some fun last night, and I hope they learned something.
Yeah. And if you have not watched the recording right there on the YouTube channel, Cody, make sure you put it in the hero position so people can find it easily. I'd appreciate that, young man. Let's move on to
I dropped a link in the chat, which I can drop that link one more time.
Very cool. Thank you, Cody. Appreciate you, sir.
The only mistake we made, we should have had Noah dress up as Father Stoccaducci, and all of us had confession. That's what we should have done.
We should have done that.
Yeah.
Why didn't you come up with that idea yesterday?
Chris came up with that. Where was he yesterday?
That would have been fun, actually. I could have got down with that. All right, let's move on. Talk individual companies here. There's quite a few companies that had earnings here today. I do want to do a roundup of those. There's others that have been in the news. Why don't we start with Facebook and Twitter here? I do not want to go down a political conversation on this. Facebook's moving here today, even though they did remove a Trump ad, Matt, in one of his posts. They basically labeled it and removed it. Do you think
it wasn't a Trump? It was their election committee campaign. It wasn't
Trump election video.
It was their campaign committee. Yeah.
Why is Facebook running so hot here today?
Because it consolidated post earnings and bounced off the 9 EMA.
Boom.
It's pretty much that simple. Like, listen, it's Facebook's turn, right? Like, it's just that simple. I mean, this is where technical analysis is powerful.
That's a beautiful setup. Gap out, pull back, fill that into the old resistance point, hit the 9 EMA. Just give me an intraday chart on that, Matt. I'd be interested to see when that started to move as well, because I think you can learn from an earnings gap like that. We've been talking earnings here for several weeks. And so many times, if you're a brand new trader, you look at a stock that gapped out on earnings, you're like, well, you can't map it out in your head how you can trade it. But it just takes time. You got to let that cook and let it develop. It did develop, Matt. And here we are moving today. Explain the technical on that, Matt, because I find that earnings gap interesting.
Yeah, calm down, which I love that. Calm down. Everybody needs to calm down. But you're right. And that's what I was going to get at just in a second. I made a joke about the technicals, but the technicals are pretty strong there. I did like the technical setup coming into it, but they basically announced their fake version of TikTok. is what they did, and the market celebrated it. It ran right at the cash open. It's a no sell day on Facebook.
Mm-hmm. Yeah, it's not sold at all here. We're at the top of that candle here. Do you get to Twitter here next, Matt? I got a very simple question. Do you think there's risk in these companies, social media companies, as we move closer to the election on some of the headline stuff? I mean, they were pulled into the news last month over labeling Trump's tweets. This has been an ongoing conflict between many politicians, many people in the media, but specifically our president in a presidential cycle with these social media companies. Is there risk here? Because that's a clean chart, quite frankly.
I don't. Yeah, there's always risk from a political perspective right now coming into the election, but this conversation on the social media, Tim, is not a new conversation for the marketplace.
Mm-hmm.
It's not. The conversation. I mean, I've made this statement many times. Politicians hate all social media. All politicians hate social media. But no, this is not a new conversation. I think the market's very, very well aware of that conversation. So I don't think it represents too big of a risk. And you look at Twitter here. I mean, yeah, it's a pretty clean chart, pretty clean setup. But ever since Twitter, what was it? It wasn't the ban on Trump, but Twitter's been going up ever since that. So no, I don't think the market cares about the political spat on social media because it's been going on for years now.
Yeah, they don't seem to. Let's move on. A couple quick ones before we get.
Why would they? Why would investors care about the political spats over social media companies?
Well, didn't he threaten to invoke some, old law from 1997 last month? I can't remember what section it was. I remember we talked about it, but
it's been going on years.
Yeah,
Dude, the market has grown immune to Trump threats.
Yeah,
you've seen this with China. You've seen this with social media. They're like, listen, wake us up when you actually do something.
Trump threatens a lot of things.
Mm-hmm.
Yeah.
They're oblivious to it. I mean, they just assume that it's just rhetoric. And so I think you need to trade accordingly.
Mm-hmm.
Well, and it's like the boy who cried wolf to a certain extent. At some point, it's going to bite you, right? At some point, it will. But the market does not seem to care about those threats right now.
Yeah, they have been ignoring them. I'll tell you, another one I do want to talk about. Two quick ones here for me, Matt, and then we'll get into earnings. Berkshire Hathaway, I did see again in the last week, they bought another $340 million of Bank of America stock. Warren Buffett feels like it's the only thing he wants to buy here recently. Doesn't grab anybody's attention because old Warren's not real sexy here in 2020 for a lot of these young kids grabbing the headlines, but he is accumulating that bank stock, Marky. I mean, is that just Warren going after a dividend? A company knows, just safety play. Mark, any read into that from the biggest value investor of all time?
Buffett has a lot more information than any of us do.
Very quickly, guys?
Bank of America.
Bank of America. So, I get it. I guess, I don't know what his analysis is. I mean, a couple weeks ago, I said that I think banks are probably in a neutral bottoming formation based on lots of different outlooks. I don't know, man. I'm just not excited. Just not excited. Could it go up $3? Sure, but I'm just not excited about it.
$3 is 10% movement, but
no.
Why Buffett? I'll tell you why Buffett. When it is reported at some point in the future that Buffett got paid 3 times the average dividend of normal investors, that's the why Buffett.
Yeah, I mean, but that would make sense.
That's the why Buffett. And I say that because Buffett has a history of getting paid a much higher dividend just to invest in a company. However, I am seeing something different. You're not having the Buffett impact that Buffett had last time he came in to save the day.
Mm-hmm.
If you remember, the last time Buffett came in to save the day was late 08, early 09, and he started gobbling up a lot of bank stocks, and those bank stocks flew. Those bank stocks drove. Bank of America had a one-day Buffett bounce. Oprah has a bigger bounce than Buffett has these days. It didn't have the follow through that historically Buffett has had when he decides to push his money to the middle of a table in an industry.
No, it's buried in the headlines. Nobody seems to even be talking about it. They don't really care. It's like it's a head scratcher, maybe. I don't know why he's not getting the Buffett bounce, but he's not. You're not getting price reaction out of it. In fact, stock isn't even up here today. It's literally on a red doji candle. The market could care less that Buffett's accumulating.
I love Warren Buffett. I am a disciple of the Buffett mentality of value investing, not growth, but on the value side of investing. But he is not having the impact in this market that he once did. And maybe it's because there's a little bit of negativity towards Buffett right now.
Mm-hmm. Mm-hmm. Yeah, I agree. He will have his time back in the sun. I guarantee that, though. He has had a pretty good long track record of doing that. One more quick.
Buffett's like, I never throw shade. I'm just saying I have seen, especially in social media, large demographics throw shade at Buffett.
Mm-hmm. Matt, how dare you say something negative about Warren Buffett? I mean, take his quote out of context. Matt's dragging down Buffett here, Mark. I don't know if you heard that or not. Rocket here. RKT, Matt, IPO company. These IPOs have kind of had a pattern here this year, and it's been very, very interesting to watch the original response to it. This is the parent company, I believe, for Quicken Loan, Matt. Is that right? This one was not on my radar till this morning when they had the IPO, but getting a nice positive price response here. Do you have interest in this stock over time?
I do. Obviously, I'm not the IPO guy. I like a quarter to 2 quarters of evidence. I'd like to see some reports. But more importantly, I like to see trends develop. I like to see support and resistance develop. I like to map out probability based on historical price action. And so that's one of the reasons why I typically sour on IPOs, is simply because I see them more as a coin flip scenario is what I see them as. I don't think you have an edge one way or the other based on my own understanding and research of IPOs. IPOs in the 80s and 90s were gobbled up. They were wonderful investment opportunities. Even in the 2000s, IPOs were wonderful investment opportunities because of the probability of an IPO going up and up and up. That has not been the case ever since Facebook in 2012. Mm-hmm. So from 2012 on, IPOs have just simply behaved a little bit differently. And some of that is due to the hype train and manipulation that happens pre-IPO, right? Because you get a lot of venture capitalist money, a lot of seed money coming into these IPO companies pre-IPO, and then the public comes in when they go IPO. So you don't have the same edge that you once did in decades past. So I do like to see some evidence really kind of form from how the market responds to a post-IPO over time with support, resistance, trend analysis. You can start mapping out an edge once you start getting those moving averages and historical price action. But yeah, this company is definitely on my radar to track. Quicken Loans is really kind of the brand name. Rocket Companies is their overlord, because that's what I'm calling the new parent companies. It's just their overlords. Rocket Companies, RKT, Quicken, they basically issued 100 million shares right at $18. Now, the $18 level was downgraded from 22 and 150 million shares just recently. And so at 18, it kind of got gobbled up. You're seeing price action. I think this is a company you should put on the radar, definitely.
Mm-hmm. Yeah, I can see it becoming a popular trading vehicle. There's no question in my mind. And I don't know if they've had the name of the company Rocket for a long time. They have, because it's a cool name. I mean, come on. I mean, Rocket. Put that on your watch list. I get it. Cool. Yeah, cool name. All right, let's get into earnings roundup here, Matt. There's many companies I want to talk about: Yeti, Penn Gaming, so on and so forth. You've got a list of those that you want to go through. I'm just going to throw it over to you. You can start wherever you want.
Well, let's start with Roku here. A very, very popular company to trade. It's been a very volatile last year for Roku. It really kind of reminds me of Tesla. When Tesla was kind of range bound between, that 280 and 360 level, where, I remember bringing Jake Pelly on to name from the past. You podcast listeners will definitely know Jake Pelly, but I remember bringing Jake on, trades Tesla a lot. He said it's an easy call. Once Tesla gets into 360, you short it. Once it gets into 300 by 280, you start gobbling it up. And Roku reminds me a little bit of that in the last year, just some volatile sideways action. But pre, the last year, 2018, 2019, Roku was one of those darlings of the market. Roku comes in reporting negative 35 cents a share versus the expectation of negative 55 cents a share. They came in at 356 million versus 305 million. On the expectation, the 356 revenue represented a 42.4% increase year over year. The beat on EPS and the beat on overall revenue is not, it's par for the course in this marketplace. These expectations coming into this earnings, guys, were really, really depressed. And we've seen beats across the board in EPS and revenues outside of, say, energy, airlines, and some individual companies out there. But in this space, we've seen beats across the board. In terms of the why it's going down, it's very simple. The industry, the CEO said the industry remains very uncertain, and they were very hesitant on their ad spend coming back. They thought that ad spend would come back sooner. Now they're projecting by the end of 2021. So they think the ad spend at Roku and traditional media will recover, but not by the end of 2021. So it's a little bit of investors look at that cautionary tale, and they're just, let's lock in some profit at that resistance of 170. But I do think Roku should be on your watch list here, right? I don't think this is a dip buying opportunity. I do not believe that. But if you're looking at that 170 handle and you think and you're looking at this breaking out of that 170 neutrality, this is what Roku can do when it flies, guys. Mm-hmm. Roku can absolutely fly. So I'm looking at that 170 mark right there, T. Give you some consolidation on the daily chart. Between 150, 170, and ultimately a breakout could be had, but I don't think you touch it under 170.
You know, breakout on momentum, I definitely believe is tradable. I think the reaction of the earnings, obviously the market reaction was down here, but the first thing Mark brought up to me this morning when I was talking to him is they had a pretty good earnings report, Mark. You actually did not mind the numbers at all, and you thought it was just fine, a little bit, down here on the price action. Mark, what was your response to Roku?
Roku reminds me of a Netflix type earnings response, right? That there's this worry that they're pulling all of the numbers. They had a great quarter, and it's like, well, how much better can it get moving forward? They got a big jump in the pandemic. It was like, for me, it was like spot on, remind me of the analysis and the price action after Netflix earnings report. So that's the only thing. Like, could Roku have gapped up 5% as easily as it down 5%? Absolutely. It's just they decided in the after hours to send it down a little bit. But I think the Netflix comparison is spot on here when analyzing the price action to Roku. Decent report, just worries that it's not going to be super amazing next quarter because they pulled so many numbers forward. But like Disney didn't get penalized for that, right? They got rewarded for that. So the market is very fickle on those great numbers and is it sustainable type thing.
Mm-hmm. I do think, though, as Roku develops over the next quarter and kind of solidifies this trend, and if it does break into those highs, Matt, you've got opportunity there. It's got to stay on people's watch list, no doubt about it.
Different for me on Netflix versus Roku. The earnings, I do agree with what Mark said on the earnings numbers, but in terms of the price action, Netflix was in a bullish uptrend at their highs. It gapped down into support. That's a different analysis from a technical perspective than where you're looking at a stock gap down in neutrality like we saw on Roku. That's why, even though the Netflix gapped underneath the 20-day moving average wasn't my cup of tea, I could understand the buying the dip mentality in Netflix. And like we talked about, I certainly understand the breakout of the $500 level on Netflix. Roku, to me, it's one of those where you're neutral going into it. You have a ton of overhead resistance at 160 by 170. I just don't think you can touch any dip here on Roku. Mm-hmm. Mm-hmm. I think you got to buy a growth company on strength. I don't think you buy a growth company on weakness.
Mm-hmm. Mm-hmm. Well, and the strength can come back in different ways, different forms. Obviously, a breakout up there at 170 would be fine, but I could also see a development where it takes longer, like Netflix did, a little bit deeper dip, but then starts rallying and then give me whatever it is, right? Price will dictate when that strength comes in.
There's no dip here at 150, 140, 130 that I personally would support. The only dip I would support, and Mark will probably like this, is if it goes down to $100. if you get some type of massive dip down into $100, you have significant support levels around the $100 to pick up Roku. So if it did that, that's a different conversation. But that's more of that's a different analysis than the buy the dip mentality.
Mhm.
You know,
and that's how I played it. You know, Tim and I were talking, and I was, you know, so I like that 110 level above that 110, 115 down at that for that same reason. I think that support level there is reasonable. I mean, once again, there was nothing in that earnings report that scared me, but you got to understand Roku. Roku's a wild child. It is an absolute wild child. And you're like, it's not like so many stocks you do those way out of the money naked puts or what, and you're like, oh, well, it's never going to get done. Roku's a wild child. Like, Roku can go up and down with the best of them, like, and really, really fast. So if you sell a naked put on Roku, realize that you have a higher chance of getting put that stock than your average stock, because the price action on Roku, both up and down, is always volatile.
Yeah, it's a stock that can absolutely fly, no doubt about that, Mark. I think on Roku, if you're looking at this from a trading perspective, I think you start the thesis with a breakout above 170. If you're looking at this more as I want to buy a depressed company, I want to invest in it, I think you're looking at that $100 to $110 range is what I think. So I think it's a fairly simple analysis to go through. You don't touch it in the middle of the ranges. You wait for the breakout as a trade. You wait for the massive dip as a more of a buying opportunity.
Yeah, it's going to be on my radar one way or the other. I'm going to be waiting for it, and I do like the company long term. Next one, Maddie, who you got?
Etsy, a very, very, very popular company over the course of the last 3-4 months. But Etsy comes in and Etsy had I want to say Etsy had a very, very, very good report here. Etsy came in at 75 cents a share versus the expectation of 42, 428 million on the revenue numbers versus 219 on the expectation. That represented a whopping 136.7% year over year, quarter to quarter increase in revenue. Which is one of the better ones we have seen in the market this quarter. They also raised their forward guidance as well. And here's the kicker, 19 million new or reactivated accounts post-pandemic, which we date that back. The post-pandemic is really talking about March on, guys. So we're not through the pandemic. It's when the pandemic hit. And so post-pandemic, they saw 19 million reactivated and new subscribers. This is what you wanted to see, guys, from an earnings numbers. Why is it down? Because it is went up 30% in the last week and a half pre-earnings. It was baked in. This is an obvious profit-taking moment. Let them take in profit. Let's reassess the situation when Etsy decides to high base or does a retracement. I think Etsy is one of those companies that should be on people's radar right now.
You know, it's a very interesting reaction. Obviously, just a little bit of profit taking. We were overstretched, but there was nothing in the report that would get you off of a bullish stance if you're a momentum trader on Etsy.
Exactly. It would further your bullish thesis on Etsy.
This one's pretty simple. Setups you can play, right? You know, as we move forward, it's pretty simple. Absolutely. If you get a retracement, you can play it. High base, you can play it.
You got to let it set up. Right. Yeah. You got to be patient, let it set up. We don't know if it's going to be a flag. We don't know if it's going to be a retracement. We don't know if it's going to be a high base yet. We're still very early into that. So be patient, let it set up. I think we're going to have a really good opportunity on Etsy. Not this weekend, but coming into next week, I think Etsy is going to be on our radar.
Yep. Next, Maddie, keep rolling through the earnings stocks.
I just want to say on Etsy, because Etsy was a really, really good report, guys. This Etsy was, like, in terms of raw numbers, obviously nothing competes with Apple, right? But Etsy, again, if you wanted to justify growth here, Etsy justified growth in every capacity with their earnings numbers. It was a to me, this earnings season really starts with Apple for me, and the importance of that Apple report really represented. Apple's a stone throw away from that $2 trillion mark, by the way, but Etsy, in terms of quality of report, obviously a $400 million company versus a 60 billion revenue company is a different assessment. That goes without saying, but the raw numbers were as impressive on Etsy as they have been on any company that has reported this quarter.
Gonna keep it on the radar. What's the next one you got?
Absolutely keep it on the radar. Nice little company we all really like. One of the two silver predominantly mining companies, Pan American Silver here. Raw numbers came in at 28 cents a share versus expectation of 13 cents. Revenue came in at right in line at 249 versus 259 million. Negative 11.8% year over year decline in revenue, which is not unheard of since all the miners have basically shut down operations around the world, right? So don't take too much into that decline in revenue on some of these mining companies. Realize the mining companies have shut down operations. And if you want to understand the importance of those mining companies, go back and review the Pete Thomas podcast from just recently. And I'm willing to bet people who listen to that Pete Thomas Trading Justice podcast made a lot of money if they took Pete's advice on silver and gold. So definitely go review that Pete Thomas Trading Justice podcast from 3 weeks ago. But I'm not taking anything here in terms of, shifting fundamentals on Pan American. Not a great report, obviously, locking in profit following the cash open here. But I'm giving Pan American a pass just because all operations are shut down.
You got to love the trend, the chart. And I agree with you. If you listen to that podcast from Pete Thomas, obviously you were set up, but we've been talking about that for a long time as well.
We constantly get asked, who do you trust in the metals market? Who do you trust in the metals market? And I'll tell you, I trust Pete Thomas more than I trust anybody else in the metals market. The man he's got an eye for the metals that is very, very rare, very, very rare. But it also goes to show you somebody that with talent, with quality, with care, that really focuses on one specific aspect of the market. He doesn't care about the Facebooks and the Twitters and the Rokus of the world. He cares about commodities. He's an expert in his field. He's the number one person I trust in analysis.
It's good to have somebody like that on your team, quite frankly, and that's why networking is so important. Next one here, Maddie, what do you got? QSR, Fastly, Live Nation.
Let's go to Hilton here. Hilton reports 61 cents a share versus the expectation of 34 cents. Those are both negative numbers. So negative 61 cents a share versus the negative 34. Revenue came in underneath of 564 versus the 713 million expectation. Revenue did decline year over year at 77.3%. Terrible report, god awful numbers, and as many of these distressed areas in the market completely expected.
Yeah, I don't have a lot of interest in these companies right now. There's too many good high flyer momentum type plays. It's the way that I prefer trading anyway. But Matt, you do have some reversal characteristics here, a little breakout, up to the 200 period moving average, stop loss right below the breakout point. Could I sign you up for a trade setup here if you get confirmation?
No, I have no interest in Hilton.
Yeah. I know you're going to see a lot of these type of reversal patterns. I mean, you got to take your picks if and where you're willing to trade them. But
let me reiterate what I said. I personally have no interest in Hilton, but I definitely see a trigger above 81.70. And so if a trader's looking at that 81.70 breakout here, you got target number one at 85.40 and you got target number two at 88.85. Both of those are legit targets, and both of them would represent a 1-to-1 at target one and a 2-to-1 target two type reward to risk ratio. So if you have an edge on the breakout, I would say yes, you could do it. It's just not my cup of tea right now.
Next one, where you want to go next? I do want to talk Penn Gaming at some point, Yeti at some point, but I know you got a bunch more
favorites. QSR here. QSR reports earnings of 33 cents a share versus the expectation of 29. Came in line with the revenue numbers at $1 billion versus 985 million on the expectation. QSR saw a 25.1% year over year, quarter to quarter increase in revenue. Mark, this is a company you follow a little bit. What was your take here?
My take was I liked Wendy's report better than I like that. Comparable story. during the quarter, lots of people bought Wendy's hamburgers compared to their previous sells. Not as many people. Burger King sales were down about 23% store over store. And Wendy's was only down about 6%. So the anything with a drive-through, Burger King just didn't do as well. Now Popeyes did great. The Tim Hortons
Popeyes always
chain,
does great.
Tim Hortons chains, and I'd like to get Greg's take on Tim Hortons. There's a number of Tim Hortons up in Canada on all that. Overall, I saw this as a I liked Wendy's better if I was going to make a fast food play, and QSR isn't a pure fast food play because they have their Tim Hortons. I liked Wendy's report better. I would even like McDonald's on a dip better. I just didn't like this report that much. I didn't think those Burger King comparable sales, they were soft.
But gave you some cause for concern.
Yeah, I mean nothing like to panic, right? But like, QSR has a ton of debt, which is fine. I like the space. I just don't like the price right now. You're always comparing, right? You're not going to make a million fast food plays. So which one do you like better? I like Wendy's better than QSR.
Mm-hmm.
Nice.
Mm-hmm.
Live Nation next, T. Live Nation. Let me just say something before I pull up this chart on Live Nation. I don't understand why this company is not down around $10 at this point. And I'm not saying that, Joe. I truly do not understand how this company is not absolutely bankrupt at this point. Live Nation comes in at a negative $2.67 a share versus the expectation of $2.10. Revenue came in at $74.1 million versus the expectation of $420. Revenue declined year over year, quarter to quarter by 97.7%. Anybody investing in Live Nation, I wish you good luck.
Marky, obviously there's no concerts going on right now in a pandemic and with coronavirus and all that kind of stuff. Their revenue number being down 97%. Can you think of another company during earnings season that's had that kind of thing? I mean
not that level.
Casinos came close, but not. I mean,
there were some 88% declines in revenue, but not to the level of Live Nation. This company has to be talking about bankruptcy.
All right.
Listen, the J Powell doesn't support that statement. We don't let anyone fail in 2000.
I don't support J Powell, so we can call that, fair.
But no, I mean, listen, if you're looking for a good short opportunity coming up here, it has some of that Planet Fitness aspect, right? It's not near the bottoms like a lot of distressed companies. Like Carnival Cruise Line keeps inching its way lower, but it's hard. Theaters near the bottoms. Live Nation, which should be right there in the analysis, isn't near the bottoms. In fact, it's quite a bit elevated. And so I think there's some good shorting opportunities here. Obviously always susceptible to, hey, vaccine news, all of these companies jump, but it's a reasonable short setup.
Yeah. I could get on board with short setups if they develop. There's no question about it. Live Nation, Maddie. So you weren't impressed, is what I'm picking up on.
I said what I needed to say. I wish all the luck in the world to people who invest in Live Nation.
Gotcha.
I don't want you to lose money. I hope everybody makes money, has a great time, but just good luck.
Yep. Next, you got any more here, Maddie?
Yeah, let's go on now that we've got Live Nation out of the way. The last earnings one I personally have is SF. Let me go back over to the chart here. FSLY. Mark, did you dive into this report at all?
I sure did.
Okay, good, because it's not a company I track very, very much, so I don't have anything besides the raw numbers. 2 cents a share on the numbers. Expectation was negative 1 cent. Revenue came at 74.7 million. Expectation was 60.4. Revenue did increase 61.7%. Beat on EPS, beat on revenue.
All right. So here's the dealio with Fast Nation. All right, with Fastly, not Fast Nation, trying to combine those two. With Fastly, yeah, a couple things. Fastly was like Dave Portnoy a couple weeks ago. Fastly had a couple down days. He's like, well, I'm going to buy some Fastly. It never goes more than down than 2 days in a row. That was some keen analysis there. You know, one day stocks are going to go down 4 or 5 days in a row, and it's going to blow people's minds. Like, how did
people won't know what to do with a
like,
market that goes down 3 days in a row.
like how? No. Here's the problem with Fastly. One, it's a reminder that stocks at the top, earnings results, very, very volatile. So it's, you know, it's still, I mean, we got Roku today, we got Fastly today, down big on earnings. And like, just a reminder of that, it's exposure to TikTok. So here's the problem. 10% of Fastly's revenue, 10%, in fact, it might 12%, 12% of their revenue comes from TikTok. And so what you have is you have a post earnings. Now, if you knew anything about this company, you already knew that, right? You already knew that they had huge exposure to TikTok. So like, if you actually know this company, that's not new, but the market's selling off on this. Like, oh wait, that's a lot of exposure to TikTok. TikTok's in the headlines, big, huge negative market reaction. Like, Fastly's a fine growth company, but man, it's one of these like bubble type valuation numbers on Fastly. I mean, it's just like bubble valuation 2000 style. So if you want to pay those valuations, fun stock to trade, lots of move, really, really volatile, fun stock to day trade, fun stock to swing trade. But from a valuation standpoint, it's really, really high, and they have TikTok exposure. And since TikTok is the news du jour of the day right now, you know, there's that increased level of volatility on the company.
High flyer taking some profit does not surprise me, though, obviously, at all. It would not surprise me if it backfills into this pivot, though, Matt, and finds some support and then runs again, though. These momentum stocks, Mark, they've been popular, and I don't see any reason why Fastly couldn't continue that at some point, right?
Not unless the market actually goes down. Like, listen, everything seems to have a gravitational pull to the top side, whether it's Live Nation, whether it's Fastly. People that buy dips on any company have not been punished at all in the last few months. Sometimes, you know, if they buy out of the money options, that's been punished a lot lately as this market has been a slow grinder. Okay. But dip buyers have not been punished. So do you think they're not going to keep coming in? Because they don't care about valuation. Jim Cramer the other day said valuation doesn't matter.
So, well, but then the day after he said, this is crazy.
Then he said it does matter. Listen, we got to stop talking Kramer. I'll lose my mind, number one. Yeah. And number two, he's a flip-flopper. We're done with it.
No, but until dip buyers are punished, guess what? They're going to keep buying dips, and it's going to keep providing trading opportunities. One day this will all be different. But until it's not, you have to assume the Fastly will find support at some point and have a nice 2-3 day rally.
This was predetermined, guys.
I think so.
Oh, yeah. That's the thing. Cause we knew their exposure to TikTok anyways. So, I mean, it's like, this wasn't like, oh my gosh, they have 12% of the revenue comes from TikTok. We already knew that.
Obviously, another one that we're going to have to wait to let it cook on a pattern developing and all that kind of stuff. Matt, you have any other ones in earnings that you wanted to talk about? Mark had WDC.
No, and I do want to say that I've seen this a little bit on these high flyers, guys, where the price action was already predetermined.
Just predetermined.
Guys, look at this massive spike in volume. Look at the price going down in front of the numbers. Okay. And then in front of the call, because the numbers weren't bad on Fastly. They weren't bad. They weren't great, but they weren't bad. But then even before the conference call, going down. This was hedge fund. It's some institution, some hedge fund. They had decided, you know what, we are getting out at the high. We don't care what the numbers are. And that's why the market started buying it at $19.
And don't even try to put reason. Why was Disney bought up? Why was Match bought up? Why was Roku bought down? Why was Microsoft sold off immediately? They just make the determination. There's a level of gamesmanship and manipulation that goes on. It's one of the reasons that, you know, for new traders, staying away from earnings It's just good advice. It's just good
Well,
advice.
one thing that people need to realize, guys, is that, yeah, there's a lot of volume on a daily basis, but these hedge funds and institutions are not like individual traders who can just get in and out of positions in lightning quick speed. The number one benefit I think individual traders have over hedge funds is the speed you can make decisions on getting in and out. When Buffett wants to get in, he's got to find a buyer. He just can't go to Mr. Market. There's not the volume there. So a lot of times, not a lot of times, but it does happen on earnings where, you know, these funds, these institutions have already made the decision to get out of a position and they're going to lock it in on earnings.
Mm-hmm. Mm-hmm. Two quick ones for me. I did want to talk about Yeti if we can here next, Matt. They actually had a pretty good quarter. 41 cents came in, beat the expectation of 16 cents. Stock obviously has been a huge runner here for quite some time. Revenue was up to 246 million on the quarter against 188 as well. It's a company I've been very bullish on for a long time. Tackle Trading's been bullish on for a long time. Obviously now that you're post earnings, look for setups. I don't think there's anything tradable up here, especially on that candlestick. It needs some time to develop. You guys got interest in Yeti here? And, obviously dirty, sexy money type stock.
I do from a trading perspective, and I do from a dirty, sexy money perspective, but not from a growth perspective. I don't.
Yeah.
So short-term trading, yes. Cash flow systems, yes. Investment thesis, I'm not there yet. And that has nothing to do with the quality of the company. I like Yeti. I'm not the brand guy on Yeti that you are. I don't own any Yeti products, but I do recognize they make a very quality product. For me, it's the growth exposure here. You're dealing with a growth-based company, a high flyer, where revenue grew 6.6% year over year. That's not a justifiable number to maintain this type of trajectory. So for me, active trading, absolutely. Cash flow systems, absolutely. I like the company, yes. But the growth to me I see it as an obvious lock-in profit if you're an investor here.
Stock has doubled in the last 3 months. Obviously, that makes you a little cautious if you're looking at fundamentals and value. Yeah.
Yeah. And if they had the Etsy 136 robust report, yeah, I'd be like, wow, yes, let's rock and roll. We got massive growth potential. Tiger just hit it into the rough, by the way. So for me, it's really simple, guys. Growth companies got to grow. It's that simple. And they didn't grow.
Not as much as what would be needed to justify that price movement. But quite frankly, from a trading perspective, I don't care about that in the short term. If it pulls back, pivots, hits those moving averages, gives me a doji and a setup, any trading setup, Matt, I would take the trade on that for sure. I like the company, so maybe I'm biased on that part of it, but I think even you, if trade setup's there, you can trade it, right?
Adam, I meant Damon. I didn't mean damn. I did leave the O out. Micromanaging, running the screen. Sometimes my spelling in the chat isn't where it needs to be, so I apologize for that. It was supposed to be Damon there, Adam. Tim, I didn't hear your question. I'm sorry.
That's all right. You got Tiger Woods hitting balls into the rough. You got chat
Tiger
going
Woods.
on. You are not a multitasker. I'm going to tell you that. I don't know if you knew that about yourself.
I'm a multitasker.
You're not.
But I am. Dude, Tiger's on his 7th hole. Come on. What are we doing here?
Yeah.
And he just missed a putt. We got to clean this up.
We got to do that. One more from me, though. Penn National Gaming, PENN. Mark, I cannot believe you did not lead with this one when we were talking this morning. Penn just broke out to new highs. They reported their earnings. Obviously, now we're post-earnings. They also said they're going to get the Barstool betting apps. Davey Day Trader, obviously popular in these market conditions, out by Q3 here, guys. Mark, did you get a chance to review Penn's numbers and the report?
Yeah, I mean, it was what it was, right? Casinos had a hard time this last quarter. Penn's revenue was only down 77% this last quarter, which was much better than much better than Las Vegas Sands. I mean, here's the problem though with Penn Gaming. A stock at all-time highs. I mean, we criticize, and there's definitely been the Portnoy valuation elevation with Penn National Gaming. You know, you look at Carnival, you look at MGM, just go look at the other casinos, you know, really depressed price levels.
Mm-hmm.
But the Portnoy following and the Portnoy bounce and the Portnoy enthusiasm,
How
you
did
would not
Portnoy get a bigger influencer than Warren Buffett in this market?
It's
I
because
want
it's 2020.
and so bad. I just want this year over with. Just
But
get it done.
you think about this, and from a trading point of view, whatever. But you think about a need people stock. Name one other company in the entire market that needs people, theaters, restaurants, casinos, airlines, that are breaking out to all-time highs. Name one other stock, because there isn't one. Most of those stocks are severely depressed or moderately depressed. Not Penn National Gaming.
Is it being traded more like DraftKings though? Because of the idea that they're going to get the app out and they're going to start doing the online gaming and gambling and all that kind of stuff?
There is obviously the element to there, but I think it transcends that. I mean, go look at DraftKings where it was.
Right. Sure.
Compare, you know,
Yeah.
like it's down what, 20% from its highs, more than that. You know, excuse me, 30% from his highs. You know, so
let's see if Matt's a good multitasker. Matt, what stock are we talking about right now?
Well, I'm still trying to get over Mark's little.
I'm trying to change the topic. It's a
So-
good point. It's a good
No,
point
I
though,
mean,
because
so, like-
DraftKings is down while Penn is breaking out. So I get it. Yeah.
No, and so no, this is a Portnoy thing. This is a euphoria stock. This is a. It doesn't matter. I mean, this is a video game stock right now. You know, because Penn National Gaming, I mean, it's what it is in 2020, right? It doesn't have to make sense. And obviously investing at these levels is, well, I'm sorry. I have a hard time betting on the airlines with naked puts at 10 deltas down at the bottoms, you know?
Yeah.
I mean, Penn National Gaming still needs COVID to go away and a return to normalcy to justify anything close to these prices. But it's 2020. Obviously, retail euphoria, which Penn National Gaming is a huge retail Robinhood stock, you know? And now that it's broken out, I mean, Penn National Gaming could go to freaking $100. I mean, nothing would surprise me. It doesn't change the fact that it is a needs a return to normalcy to not get these brutal numbers that it's had the last couple of quarters. I mean, these were huge losses the last couple of quarters. Massive.
Mm-hmm. All of that being said, that it still is a breakout of the all-time high momentum, volume, your post earnings, a huge candle. We're up 12%. I think it's got to be on a bull watch list, guys. You know, I mean,
yeah, y'all can trade it however you want, right?
up
You
and
know?
yeah, I mean, Maddie,
Let me say this about Penn. Portnoy's just an investor in Penn. He's made that clear on Twitter. He's just an investor. But Penn National Gaming better hook him up somehow because they have skyrocketed ever since he was public coming into the financial. Like, he probably represents 50% of Penn National Gaming growth in the
without it, he is the only reason Penn is at the price level. And like,
take $3.
If it wasn't for Portnoy, and this is no doubt, go look at MGM's chart. Penn National Gaming.
I have never understood influencers in my life. I've never understood it, like social media influencers, until now. I now understand the influence of media influencers. It's very impressive what one man can do on the
They
hype
should
train.
change the ticker symbol to Dave.
They
You
should.
know?
Isn't that already a ticker though?
I think
Isn't
that's
that
Dave
Dave
This
Buster-
stock would
Dave
be
and
trading at
Buster's?
$12 if it wasn't for Dave Portnoy. He is responsible for 75%, if not higher, of its current market cap. And I don't think it's debatable.
I don't know. The influence he's had on this industry and Penn National is it's quite impressive when you actually think about it.
Canis Spader Christmas, aka Jeff, does ask a great question. I don't know if we said that or not, but I like the name. Did you call him Port Noise?
That's I didn't. That's cute.
That might have been a Freudian slip. That would have been my second Freudian slip in the last 3 minutes. But
Hey, listen. About a month ago or 6 weeks ago, I got like $112 for a January leap at $12 on Penn. So I made a little bit of money on Dave Portnoy. So I'm happy with it. I just want to chase. I mean, it just seems like it's going to be real hard. I mean, because
again, though, you hate breakouts.
Yeah.
Once again, I hate breakouts on pandemic need people stocks in particular. It's the first one we've had.
The only breakout I've ever heard you support is the most crazy, radical, high-flying one that goes against everything you've ever believed in, and that is Bitcoin. Other than that,
I supported the breakout in October of 2019 when the broad markets were breaking to all-time highs and there wasn't an ounce of negative
news.
Matt,
I supported one of the last 14 million breakouts.
Yeah, so there was another historical breakout that I supported.
Do you have interest though, Tim, from a trading perspective? I mean, that $40 price point on Penn is a fairly significant price threshold on Penn. It's hit there multiple times, including pre-pandemic. It was right there at the high before it tanked over that month when everything was tanking. A breakout of the 52-week high, breakout of the all-time high, a growth-based area of the market, regardless of the logic or the reasons. I think all of us do support the growth area of this marketplace in online gaming. Would you agree with that?
I'm taking the next setup. I would almost put it at a very high probability. The next tradable setup on Penn. I mean, that's breaking out of a weekly multi-year high with volume post earnings after a consolidation.
And you were overextended coming into the breakout. You had consolidated coming into the breakout. It's not the cleanest break here, but I think if you get a retracement down to 40, you got to at least be interested in a snapback retracement into 40 if it confirms.
I'm interested. Yeah, it's on my list.
Realize though, on any trade you make with Penn, you're susceptible to two news storylines. One is the general COVID bad storyline, but more importantly is the sports shutting down, rumor, threat, whatever. Those things send. Penn has had many 3, 4, 5% down days, DraftKings included, on those rumors, and they've been plentiful lately. So do realize even a short-term trade, you got a lot of news headwinds that you got
day by day volatility risk. I would agree with you. Yeah, but
at what point, because the market will care about COVID at some point, but when is that? Because it hasn't cared about the detail.
Well, it does care about the sports headlines because Penn and
it does care about college football getting shut down if that ever did happen. UConn shut down. Obviously, we're seeing negotiations in other areas, but I do think there's some volatility there. I just feel like if it holds 40, I think you got to look at it a little bit very quickly.
I don't want to go off on this long though, but I do want to say something about that because the market sensitivity to college football and the need for college football to play amidst all of this stuff. Matt and I were talking last night. College football, you've got this big business. Just pay those kids, can you? If you're going to make them go play, pay the kids.
Take on risk. They need to get paid. If college football, if you're finally admitting the importance of the revenue streams that college football represents, pay the kids.
Yeah. They have
been making money off their likeness for the last 100 years. Pay the kids.
Pay the kids.
But Paul, odds of Tiger winning PGA or Penn selling off next week? I hate that question so much, Paul. I don't feel Tiger has the warm up necessary to come in and win this week. So I'll take Penn selling off next week just because I just don't think Tiger has the warm up going into it. And there's a lot of good players getting on fire right now. Justin Thomas, hitting the ball well. Koepka doing, coming out of it last week. Dustin Johnson can hit the ball, a mile. So there's a lot of competition at that top end. So I'm going to take Penn selling off. Linda, 2 shares. I want to throw it out to everybody else here. Linda, would you rather buy, and we'll just say 2 shares of Amazon? Okay. Would you rather? And I'm assuming investment, Linda. Would you rather buy 2 shares of Amazon or 14 shares of Apple pre-split, which would give you, what would that be?
About the same capital, $6,000 each. Yeah, something like about the same capital.
$6,000 each.
Yeah. Give me Amazon. Front run that breakout.
I'll take 1 share of Amazon and 7 shares of Apple.
You're such a cheater.
Yeah.
No, for me, it's not. For me, it is not close, and it's not. Like less. I wouldn't even have to think. It's Apple, Apple 1, Apple 2, Apple 3, Apple 4, Apple 5. Don't get me wrong. Amazon's a wonderful company with tremendous growth potential. It's a mainstay in the marketplace. It's 3 or 4 of the most biggest, highest quality companies out there. But I love that Apple earnings report last week.
I love that Amazon setup though, dude.
Well, we're not talking a trade here, but
I'm talking trading. So
okay, talk trade here. I still like Apple here. You're breaking out of a flag. You're breaking out of 450. Most likely, you're going to see price appreciation. You're in a momentum-based trend. Even when you're talking technical setups, the trigger on Amazon, you got chop here, Tim. You got chop at 32.54, and you got chop up there too. So I don't get me wrong. I like the continuation pattern. It's definitely tradable, but I'd still take Apple.
Yeah. Good question, Linda. All right, boys, let's start moving into final thoughts here. And
you just went. That was just dirty. You just went dirty, Adam.
I don't know what it says more about, like evil Nick Saban or about the purity of Utah. Mark Adams says if they start paying kids to play football, Utah will never see the top 10 ever again. # throwing shade from the SEC.
How much money the Utah, and I'm not. I'm just gonna tell you. Nope, I'm not gonna say it publicly. But there's a lot of money in those Utah college programs. A lot of money.
You underestimate, you SEC Homer fans, the reserve capital of the
SEC. You might as well just you did talk religion and politics and
and I'm gonna tie it all together. You don't think Mormons stack fast cash? They've been investing in Coca-Cola for 30 years.
Mormons got a ton of money, guys.
The Mormon Mafia got more money than you Southerners could even dream about. So don't worry about our programs here in Utah.
Go to war with the SEC. I don't know.
The LDS Church will keep our football players well funded for decades to come.
SEC football fans are as passionate about that as Mormons are about religion.
No, it is religion. It is
religion. So we're starting to fight. I don't know if I want.
Adam, I'm not saying anything bad about anybody except Nick Saban, and that's just because he screwed the Miami Dolphins. So your anger should be directed at Mark.
Hey, and listen, all I remember is a little bowl game a few years back when Utah beat Alabama as 10-point underdogs.
That was a fun game.
Sure Alabama tried very hard in that game.
The excuse every SEC fan has when they lose a game. We weren't just trying that time.
I watched the game.
So.
All right. Let's start rounding this one up here, boys. I got a couple last thoughts myself. Mark, let's go with you first, though. Final thoughts, any news we missed, any companies you want to highlight?
Listen, it remains, and you just can't, listen, this is a crazy market, right? It's a slow, grinding market. Who knows where the top is? You just got to keep doing whatever it is you've been working. For me, it's been selling puts, managing my positions, cash flowing. It's been an easy market for that. A lot of people, it's been directional trading. It's been working. Keep doing what you're working. One day it will all snap, right? That's why you don't have a million trades out at once. That's why you're not over leveraged. That's why you make money, and then one day will end, and then you can look back on the weeks and months and be like, wow, that was a great run. Now let's readjust. What are we going to do now? Who knows when it's going to end? Just don't be irresponsible so that day of reckoning gets you and takes back months of profits. Keep doing what you're doing, rinse and repeat. Don't be irresponsible.
Okay, I'll go next here. By the way, just an announcement. We got Cash Flow Club tonight for pro members, 8:30 Eastern. Mark, who's teaching tonight, by the way?
I believe the great Tyler Craig, part of the Mormon Mafia, will be there laying it down on the show tonight.
I like it.
And
always...
SC fans are still welcome.
SEC fans definitely still love Tyler because Tyler loves everybody. So
Tyler
always does a
does.
great job.
Love the passion that the South puts in their SEC college football. I love it.
Dude,
I
I would
love
love
it.
to go see like a Georgia,
I think it'll
Alabama
be one of the
game.
most
Yeah.
amazing experiences to see a Bama Auburn game. The
Listen.
Iron Bowl. Are you kidding me? That would be so cool.
No fan base is more passionate, I would argue, in all of the world, maybe other than some soccer national teams, than SEC football fans. COVID-19 could have a 47% more kill rate, and
They're still showing up.
I don't
and
know, man.
Georgia, Florida would still have packed stadiums.
I'm not
And
going to
they
push hard on this,
it's
but
worth the risk. It's worth
Michigan,
the-
Ohio State.
Oh, not even
Oh,
close.
no, get outta
not
here.
even
Oh, come
close.
Oh,
Are you kidding?
Dude,
Michigan, Ohio,
They
Auburn,
got a lot
Alabama. Yeah.
to do in the South. Like they choose football. There's not a lot of things to do when Michigan and Ohio State play football. You're
Yeah.
going to show up. So
No. Yeah, that doesn't compare to Alabama, Auburn.
I think we're
It's
trying
not
to
even in the
offend
same
every
world.
demographic in college football today. I think that's what we're trying to do.
Mhm.
No, SEC is religion. It's religion down there.
And one last chart for me, Matt. McDonald's. I want to bring this one up for a couple of different reasons. Number one, it was the chart of the day in the email that I sent out today. And by the way, I also highlighted the video that we did last night. Go watch that replay if you've not seen it yet. But I think McDonald's actually gives you a really good teaching opportunity, learning opportunity here. Over the weekend, we had this on the reports, on the option report, and it had a beautiful cup and handle developing. And then it pulled back, pivoted on that 200 period moving average. Monday morning, boom, little tiny doji, but then we confirm, and that's an entry point. And now you're double confirming above a resistance, or you're pushing against that. Obviously, we're going to need a close up here and all that kind of stuff. But guys, I mean, that first entry doesn't mean you can't continue to scale into things. There's a lot of stuff you can do with step system principles on charts like this. McDonald's, great pick from over the weekend, Matt. And I think it was one in the report meeting last week. You defended. You were passionate about.
I'll bring it up in the scouting report meeting tomorrow when Mark shows up.
Listen, we scoreboard at the start, we scoreboard at the end. Listen, scoreboarding is fun, right? And it's a beautiful
thing about who are very new to us. We like sports, if you cannot tell.
No.
Yep.
No, listen, I think one of the maddest Matt ever got at me is he was talking crap in our fantasy football channel, and I just beat him, and all I said was scoreboard. And he went off on me like a drunken sailor. Like, it was some potty mouth discussion at that point.
No, Mark, you can't say potty mouth. You're the one with the potty mouth today, buddy.
Listen, the amount I swear outside of the halftime report versus the amount, listen, I'm going to be Trump with like cases, right?
I can't even be that upset right now because honestly, the over under I set for the halftime report, you usually make it pretty under. So.
Listen, I swear.
Mickey makes a great point. By the way, your college SEC football fans pale in comparison to some soccer clubs around the world.
The soccer thing,
soccer around the world is intense.
SEC fans don't kill one another. They, that does happen on occasion.
Dude, they're crazy. Soccer fans. He's saying that I guess some Glasgow Celtic, they had the best fans in the world. They took 25,000 fans to some city they were playing in and drank all the alcohol.
That is intense.
I love it. Matty, your final thoughts, sir.
My final thoughts are my next 8 hours is pretty set in stone. I'm going to be watching the PGA Championship being played at Harding Park, and I got some road stories from Harding Park. Me and Bull Moody played Harding Park one time, and we were out there in San Francisco, and we were having so much fun at Harding Park which is a municipality course there in San Francisco. But we almost missed a flight. I can't believe we actually made the flight, but Harding Park's a beautiful, beautiful municipality course. When I get to play on some of those courses, it's just a little bit of a different meaning, but I love golf. I love everything about golf. So I'll be doing that. That's all I care about right now.
I will watch golf on Sunday, like a gentleman.
I'm 42. That's the only game of golf I can play these days without breaking my knee.
And-
So I'm at that middle-aged area of my life where I enjoy football more than anything. The Miami Dolphins, I haven't missed a Miami Dolphin game in 20 years now. I'll be watching my Dolphins when they lose all the time, or when they win 1 or 2 times a year. So, I truly do enjoy golf. There's no doubt about that.
And my last thought, and then we're wrapping up, no commentary on top of this. I'm with Dina from earlier. The NFL is way better than college. I could care less about college these days. I've been that way for about a decade. I don't even get it.
For a decade. I'm more of an NFL guy, but
I'm an
still
NFL dude.
I still enjoy watching BYU games. Like, I just
They're
can't get
fine.
that.
I got nothing negative to say about them. I just love the NFL. I love the NFL. So big Bears fan. It's going to be interesting when sports and football does come back. All right, guys, that is our show here today. And we'll be back tomorrow, Friday, Frank Day. Frank will be here as he always does on Fridays, breaking down charts, looking at breakouts, breaking down the news as well. We got a jobs report tomorrow morning that could be a market mover. Any updates on stimulus, we'll bring them to you. Until then, if you are a pro member, remember tonight we got that Cash Flow Club. Watch the replay here on YouTube from our show last night. If you've not done it yet, click that thumbs up, subscribe, click the bell, come back and join us every day when we do this halftime show. We're out for today, guys. Bye-bye.